Trend trading became prominent in the late 1980s when Richard Dennis popularized the concept through his Turtle trading group. Richard Dennis, who was deemed the Prince of the Pit in Chicago, successfully turned a $16,000 loan into just over $200 million in 10 years. Although wildly successful in his own right, Richard Dennis was convinced that anyone could learn how to trade. So he made a deal with fellow trader William Eckhart, stating that he could recruit a few people with zero trading experience and turn them into long-term profitable traders. And here's the crazy thing, he was actually right. Over the next 5 years, Richard Dennis and his team of turtle traders wreaked havoc on the futures market and generated over $175 million in profit just using the system taught by Richard Dennis. Through this experience, Richard Dennis proved that trading was indeed a teachable skill, once and for all. Before I jump straight into the top 10 trading tips given by Richard Dennis, please do me a small favor and hit that thumbs up button. It really helps support the channel and I appreciate that. If you are new, do hit the subscribe button as well because we upload new videos every single week and these videos will help you become a better trader. My team also runs a free Telegram channel where we send out our signals in real time. So you are definitely missing out a ton of value if you have not yet joined the Telegram channel. I will leave a link to the Telegram channel in the description down below, so please join us there. Without further ado, here are his top 10 most valuable lessons he learned over the course of his trading career. Lesson number 1. A good trend trading system will keep you in the market until there is evidence that the trend has changed. No matter what anyone says, there is no way to predict how high a market will go with 100% certainty. As a trend trader, the best thing you can do is trail your stop loss as the market moves in your favor. It is not wise to try to predict when the market will turn. Let the market show it to you. It is up to you as a trader to determine how tight your stop losses should be. Too tight and you run the risk of being stopped out during a small retracement, and too wide might erode much of your profits on a trend reversal. So the key is to maintain a fine balance. You can use exit indicators like moving averages, chandelier exits and the average true range to help you trail your stop loss. I have previously recorded a couple of videos going through these, so make sure you check them out if you have not. Lesson number 2. Whatever method you use to enter trades, the most critical thing is that there is a major trend and your system must ensure that you trade that trend. Breakouts are what most trend traders use to enter positions, whether you are going long or short. But most traders find it hard to justify entering a position after the price has already risen considerably. Retracements may be more psychologically easy to enter, but as a trend trader, you may never get that opportunity to enter if the market doesn't offer a pullback. It is okay to pay high prices as long as momentum is on your side and you can sell it for a higher price. The same goes for selling at a lower price. Lesson number 3. If there is any lesson I've learned in the nearly 20 years that I've been in this business, it is that the unexpected and the impossible happen every now and then. Just look at what happened to the price of oil futures in 2020. It went negative. Most traders went long thinking that it was extremely oversold. No one expected it to go into negative. In fact, some brokers ran into issues as well because their charting platform were not able to handle negative prices. The lesson here is, as a trend trader, you should never try to predict what is too high or what is too low, because in the end, markets can always move higher than high and lower than low. Anything can happen in the market. This is a concept taught by Mark Douglas in his book Trading in the Zone. That's a very good book and I have previously done a book summary on that. I will leave a link to that video at the top right corner and at the end screen of this video. Lesson number 4. Trading decisions should be made as unemotionally as possible. Every trader, regardless of the system they trade with, should avoid trading emotionally. Ask yourself, have you ever felt hope, greed, fear, or despair when trading? You buy a currency pair at high prices because you are afraid of missing out, or otherwise known as FOMO. You hold on to your losses hoping that they rebound, and this is otherwise known as the anchoring effect. Or perhaps you trade larger than normal, hoping to make back what you have lost. That's revenge trading. By creating a trading system and sticking to it, you can avoid many of the emotional pitfalls that most traders find themselves in. Lesson number 5. Trade small because that's when you are as bad as you are ever going to be. There is a great quote about trading too large that goes like this. There are old traders and there are bull traders, but there are no old bull traders. Many traders rush into trading large amounts of their account while attempting to learn, and most of these traders will burst their account. You want to trade small because you will make mistakes. Plenty of them. It's a fact. So why pay more in tuition fees to the market when you can do so at a fraction of the cost? Learn to trade small and if possible on a paper account until you understand the nuances of the user interface and your particular trading system. The market is always there for you, so there's really no need to chase after it. Lesson number 6. I could trade without knowing the name of the market. Richard Dennis and his group of turtle traders were so confident and successful at trend trading that they were actively participating in many markets simultaneously. You're probably wondering, how is that possible? How are they keeping track of all the instruments? Well, it's because as trend traders, your only responsibility is to trade the price in front of you. It could be Bitcoin, Euro dollar, crude oil, Apple shares, gold, it doesn't matter. The only thing that matters to a trend trader is the current price action. Price is in part moved by an imbalance of buying and selling pressure, which is based on emotions like hope, greed, fear, and despair. These emotions or biases can last for a long time, which in turn becomes a trend, something that trend traders must capitalize on. For this reason, trend traders don't need to know the name of the market. They need to buy when price is rising and sell when price is falling. And this is all reflected in a price chart through technical analysis. Lesson number 7. In the real world, it is not too wise to have your stop where everyone else has their stop. Richard Dennis understood market psychology better than almost anyone during his years in the market. Ask yourself, how many times have you set your stop loss near a support level only to be stopped out of a trade prematurely? And just a couple of moments later, price goes into your intended direction. Well, smart money has financial incentives to hunt for stop losses, and the more obvious the stop loss level, the easier it is to trigger them. Again, this is a concept that I talk a lot about on this channel, so if you haven't subscribed to the channel, go ahead and do it right away. By setting your stop loss away from the obvious market structure levels, you can avoid being stopped out prematurely and stay in profitable trades longer. Lesson number 8. Trading has taught me not to take the conventional wisdom for granted. What money I made in trading is a testimony to the fact that the majority of traders is wrong a lot of the time. The reason most traders lose over time is because they have the wrong expectations. They expect to get rich quick without putting in the hard work that it takes to figure out how to trade profitably long term. They spend too much time on websites or YouTube videos looking for the next big strategy to try. When you understand that 99% of the people who deposit money into their brokerage accounts end up bursting their accounts, you will become fiercely protective of your money. Your opinion is as valid as anyone else's. So test, verify, and execute. Lesson number 9. I learned that a certain amount of loss will affect your judgment, so you have to put some time between that loss and the next trade. Much like poker players, many traders will experience emotional drawdowns that coincide with poor execution. If you are a technical trader, it's imperative to take some time between trades after a series of losses. As a technical trader, your trading decisions are based on your current analysis of the markets. Your bias may affect your decision-making skills moving forward. So take some time away from the market because, as I mentioned earlier, the markets will always be there for you. There's always going to be another trade opportunity. Lesson number 10. You could publish trading rules in a newspaper and no one would follow them. The key is consistency and discipline. Often the hardest thing for new traders to understand is that there is no such thing as a magic indicator or group of indicators. The most important thing is to develop a trading system that works with your specific personality and risk profile and execute it consistently. Richard Dennis knew that trading is mostly psychological, which is why he knew that trading could be taught, and he used his expertise in understanding the general psychology of the market to bank millions of dollars in profits. Consistency and discipline will always be more profitable over time than skill. A great trader will make a ton of money with a poor strategy, but a poor trader will lose all his money even with a great strategy. Always remember that psychology is more important than methodology. So summing up this video, the wisdom shared by Richard Dennis is still as applicable today as it was decades ago. So what's your biggest takeaway from Richard Dennis? Let us know in the comment section down below. As promised, I will leave a link to the Trading in the Zone summary video right here. I recommend that you check that video out next. Thanks for watching and I'll catch you in the next one.